I'm pleased to welcome our speaker, Steve Mass. Steve is our residential mortgage lender. He works for Mason McDuffie in Los Angeles and has been in business for over 10 years. Steve is originally from Plainville, New Jersey, but has lived in LA for over 45 years. His previous occupations include credit specialist. Yes, Steve has been in the credit business all of his professional life. His hobbies and interests include coaching baseball and watching professional football. Steve's burning desire is to one day own a professional Major League Baseball team. Something that you might not know about Steve is that he got into a huge car accident many years ago, and he was lucky to survive, and that is why he looks at every day as a blessing. Steve's keys to success are knowing that where there is a will, there is a way. Ladies and gentlemen of Westside Referral Network, please welcome to our virtual stage, the one, the only, Steve Mass.
Thank you, Dan. Appreciate that intro. Good morning, everybody. I am Steve Mass, a mortgage real estate agent for the mortgages. I want to start off with the 3 things you need to get a mortgage. 1, you need the income. You need to have a job. If you're self-employed, you have to pay your taxes, unfortunately, right now. If you're W-2, we take the W-2. You need good credit, anything over 620, but you really be better if it's over 700, and you need a down payment. I was referred to a couple 2 years ago. This couple was so excited to get out of the renting situation. Unfortunately, when I ran their credit and started talking to them, I could not get them into a loan because they had a bankruptcy. Now, bankruptcies, you have 2 options. You got to wait. Well, you got to wait 2 years or 4 years. 2 years for FHA, 4 years for conventional. So that we spoke. I gave them a plan on how to be able to qualify in the next 2 years. So if you look at it, they have a bankruptcy, so that credit is shot. They didn't have much of a down payment, so they had to work on the down payment. The income they had. So they had one of the 3 possible ways for them to get into a mortgage. I told them on their credit side, you have to get a secured credit card to start building up your credit card, your credit report. And we had to wait the 2 years. So in the middle of the 2 years, start saving money. So I explained to them the latte factor. So I'm not sure if any of you are familiar with the latte factor, but what the latte factor is they happen to be going to Starbucks every day, $5 a day. So I told them, instead of going, your goal is to own a home. So you need to make sacrifices in this next 2 years to be able to accomplish that. So by you paying $5 a day is not helping you with your goal of owning a home at the end of the day. If you really want the home, go to Albertsons, go to Ralph's, go wherever to get instant coffee, have it, it'll last you a month. It'll cost you $5 maybe for that whole can. The rest of the time, you put the $5 into your savings account every single day. Like you are paying the $5 instead of giving it to Starbucks, you give it to yourself. Now, I've said this presentation regarding the latte factor to tons of renters to become a homeowner. Not one person, not one couple followed what I said, except for this couple. So after the 2-year mark, which happened to be a few months ago, we started the process. Actually, it was like about 5 months ago. I referred them to an agent, Mark Knights, may he rest in peace. I referred it to him. Then I had to refer him to a different agent. This past Friday, they got their home. They were so excited. They didn't think it would ever come, but it did. The difference with myself and the other mortgage people out there is that I do have a plan for renters. I do have the lenders that I go to have inside the box lending. I take that out. I look outside the box. I figure out how to put it into that box for the lender. I hope that makes sense to you. I help first-time home buyers, renters, become a homeowner. I help homeowners pull cash out, pay off debt, do whatever they need to do to have monthly payment be less and more monthly income. I help owners, homeowners, take money out and invest in different properties. So what I'm saying is I turn renters into homeowners and homeowners into investors. My name is Steve Mass. I'm a mortgage lender. Any questions?
All right, let's see the questions. Thank you, Steve. It's amazing. Steve totally helped. You wouldn't believe how well he helped me out on our properties. It was amazing. Eli.
Hi, good morning, everybody. I just want to give testimonial to Steve. He helped me so much buying my home years ago. He been with me, and I didn't have the greatest credit at the time, and I didn't have the money at the time, and I did it because of his guide. And after that, my brother bought a home, also with the help of Steve, and just being able to have Steve in the group, being able to guide us through. And since then, I had some questions. I had to give a call to Steve. He always been there. He's just amazing. Steve, I love you. You are amazing with everything you bring and everything you do for the group beside being a realtor. Thank you so much.
Thank you, Eli.
Anastasia.
Yeah, Steve's awesome. I have referred lots of clients to him, especially obviously when interest rates were lower and it was a good time to refinance. But he's also helped other clients just get out of like sticky situations where they've managed to accrue massive credit card debt when they're retiring, and helped them like come up with a solution so that they are able to retire and do the things that they need to do. So he's been amazing. All of my clients love him. So he's a great person to work with.
Thank you, Anastasia. Okay, so a lot of questions that I get asked is, what are the rates today? Okay, now whenever I get asked that question, it's a loaded question. And the reason why I say that is it depends on a lot of different factors. So basically, it depends on your credit, depends on how much, I call it loan to value, meaning how much you owe to the value of the property, and your debt to income ratio on some lenders. So when you ask me what are rates today, I don't know what the rates are today for your situation, but in general, I can do that. So for example, last month, rates were in the low threes, maybe even under 3. Now, they're in the high 5s, low 6s.
Wow.
Just in a month. Now, yesterday was a good day for rates, and today is a good day for rates. But doesn't mean anything. So one thing that I've noticed being in the mortgage business for so long is that unfortunately, with the rates, it doesn't go slowly creeping up or slowly creeping down. It goes up or it goes down. And it's been like this for the last 3-4 years. It's been crazy, especially before on the pandemic. We all know that rates dropped. And the reason why there was a big panic when the rates dropped was because the servicers of these loans lost money. And the reason why they lost money was because everyone who refinanced 6 months before the pandemic refinanced again. So when they refinance again, they lose the money that they were supposed to make on servicing those loans. And those loans,
you have 2 minutes.
Thank you.
You have 2 minutes, Steve. Thank you.
Those loans that were being serviced, that's how they make their money. So after 3-4 years, that's when they start making their money. So because they lost so much money, they went into panic, and a lot of mortgage lenders were actually keeping loans when they never did before and servicing them themselves because of what happened. So now it's a whole big hoopla. Now they're afraid that because rates are up now, that if people are getting mortgages and refinancing and stuff, that if it goes down, they're going to do it again. So they're very skeptical on what's going on. So there's a little bit of insight on my side on in the mortgage industry. Any other questions?
That's interesting, Steve, that it went up and down that much. And how much on a $1 million house on a monthly payment? What's the difference between 3% and a 5%?
It could be a couple $100 a month, even more, like $200-300. It's a big deal. Now, I'm glad you mentioned that, Peter, because there's also a difference between a 719 score and a 720 score. It's a big difference. So here's the situation. You can have 640, usually it's 620, then 640, 680, 700, 720, and then 740. Anything above 740 is really great. You can't do, I mean, it doesn't matter if you go 740 or 800, it's the same rate. Now, when I say, I apologize, it's not really the rate. Sometimes it's the cost of the rate. So for example, if you have a 720 credit score, your rate could be 6%. If you have a 650 credit score, your rate could still be 6%, but the cost of that rate will be higher. Even though it's the same rate, you just got to pay more for that rate. Christian, you had a question?
Yes, Steve. So in terms of the FHA loan, say you had 20% down to do a normal loan, would it be more advantageous to do the 20% or stay more liquid and do 3.5% down, given that you qualify for both?
Now, that's another great question. Okay, so it depends on the client. I would rather you put little money down so you have enough cash to invest and do other things and to make, just for case for emergencies. Now, would I do FHA versus regular? There's the big hiccup. Now, if I would rather you do conventional, if it's under 647, 200, do 3% down if you're a first-time home buyer. If you're already a home buyer, then you got to go 5% down. If you don't have that and you have to go 3.5% down, then I go FHA. Now, the reason why FHA I do not like, but I like FHA, you got to pay upfront mortgage insurance and monthly mortgage insurance. So it doesn't help the borrower, but it allows you to go to a higher debt to income ratio, which is easier to qualify. So to answer your question, I would most likely depend on the situation, but the lower down payment, the better. So you have enough money for emergency. Eli.
Hey, so becoming investor, so buying a second home requirement as far as buying the first home. How you become investor? How you become a person that have a second home?
Well, second home is different than an investment property. Second home, you got to qualify with the first home as well as the second home because there's no rental income you can use. So you got to qualify for both. And the second home has to be a little bit farther away from your house. Like it can't be right down the street. Second home, it could be in Malibu. It could be Palm Springs. It could be somewhere that's like, could be a second home place. If you go for a rental, it's easier to qualify mainly because you can use the rental income, even though you're not getting it yet. You can still use that rental income to help you qualify.
Interesting. Thank you.
You're welcome. Chiquita?
I just want to say, as you guys listen to Steve, the dude is brilliant. And the nicest thing about Steve is that if he doesn't know the answer, he will tell you, he will find it, and he'll call you back the same day. So if anybody needs or is in a situation to work with him, he's your guy. You're one of the most honest people I've ever met, Steve, and I compliment you, and I'm thrilled to call you my friend.
Thanks, Chiquita. I appreciate that. Dan Gordon, last one.
What is an easy way to tip you? Because people are going to come rushing up to me and say, hey, I need a loan for my, to get a house. What should I do? How do I open that conversation up? How do we open that conversation up?
Well, you can say, I have a great mortgage lender that can help you go through the process. And let me tell you guys, when I talk to first-time home buyers, I tell them, because they are scared. It's a huge purchase. It's something they've never done before. They have done a car payment, a car loan, which is like maybe 25 grand, 30 grand, but no one's really done $100,000, $200,000, $300,000, $500,000 before, especially for a whole first-time home buyer. So what I tell them, I go, look, I'm available for you 24/7. I don't care if it's 2 a.m. Give me a phone call, give me a text. If I don't answer, which I probably won't, I'll probably be asleep, but do me a favor, leave the message on my machine so I can call you back, get off your chest, so that you can sleep, and then in the morning we'll tackle the situation. And so far,
what I'm
I
hearing
haven't got one phone call. Just to let you know.
So what I'm hearing you saying is like, bottom line, like, don't be afraid that because of this giant amount of money, like you're going to be there every step of the way.
Correct. Absolutely. Now, look, I do this every day, right? All the real estate agents on this call does this every day. So it's like the second thing for us. It's really easy for us to get caught up and say, what are you talking about? It's the easiest. Don't worry. It's so easy. But I know as a first-time home buyer, it's not that easy for them. It's hard, especially the couple that I talked to you about in my story. They're going nuts. They're calling me all the time. They're scared. They're this, they're that. Is this supposed to be happening this way? Is this happening? Do I have to overbid because everyone is overbidding? I mean, this happened to be like the big storm for them, because when I first started with them, we were at 3.5%. It came to be at 3.99%. At the end of the day, I had to go 4.25%. I couldn't go higher for them to qualify, and they had to pay 2 points just to get into that loan. Whereas if they would have done it earlier, it would have been 3.5 points. I mean, 3.5%, no points. So it changed so much, and it happened to be in about a two-month period. So it's definitely hard for first-time home buyers, but I try to make it as easy as possible and explain to them as fully as I can so they can understand exactly what I'm doing, what they're going through.